Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So, main event, these next 2 weeks, they're going to be absolutely packed. And get your popcorn ready because this coming week you have multiple monster names, big tech reports, big industrials, bios, energy, everything. It's going to be a crazy one, all right? So, we're going to jump right into it. Monday morning before the open, Halliburton pricing in about $1.20, give or take. The way I always say, Schlumberger is always the first of the energy names, especially the oilfield service. If you're interested in playing these, I feel like that's the way to go because Schlumberger will take some of the surprise away from Halliburton. Personally, I'm not a huge fan of Halliburton anyway, so I just kind of like to go with Schlumberger because it reports first, typically moves first, usually one of the leaders. I'm probably not going to do anything with Halliburton. And then SAP is also Monday before the open, but they already guided. You can see that it was up a bunch. So my rule. If they guide early, I typically just leave it alone. After the close Monday is really only one name, and it's Ameritrade, TD Ameritrade. The price in about 215 or so in that ballpark. So the other discount brokers reported E-Trade, Schwab, right? They aren't their brokers, and they've been okay. TD Ameritrade has definitely been lagging the most, and it has more of like a gap to fill. So, I guess if you're looking at these, and like I haven't traded the other ones this past week, but if you are looking at these, you could see maybe if the numbers are decent, if it does make a little bit of like a push, because it really has been lagging, like the E-Trades and the Schwabs, some of these other ones, right? So you can see E-Trade, right? Schwab, right? And now if you look at the TD Ameritrade, it's still down a ton. So if you're interested in it, that's maybe how I would look at it. Tuesday before the open. All right, here we go. So Biogen, 12 points is what they're expecting. First big biotech to report, but I mean, as you can see, this thing has just been stuck in a long, long sideways range. And to be honest, like earnings haven't really been that significant since it cratered on the Alzheimer's data back in March. So, you know, stuck sideways. Earnings aren't really relevant, and I'm not sure there's gonna be enough news this time around to change that. So, I mean, it does look like it could be in danger of breaking down just because it's underneath all moving averages now. But at the same time, I mean, it's done that what like now four separate times, and it hasn't broken. So a little bit tougher of a name, but kind of an interesting setup. Hasbro. So 8.5 points is what they're looking for. We played this last quarter for a breakout here, and it worked really nicely. It kind of like a roller coaster move after that. So it was like up and then straight down, then big gap, and then moving back up. So it's off only marginally. It's actually kind of closer to its high now. I guess I'd be bullish biased on this one again, but I doubt I'd be expecting a move of the magnitude in July. Actually, like April and July, two big moves. So it seems like the options are getting priced a little bit more aggressively because you had back-to-back big moves. So if I played it, probably something bullish biased, but we need to get the risk down. So like spreads, flies, calendar, something like that. McDonald's, 625 is more or less what they're looking for. Really like the hallmark of McDonald's this year has been like this really aggressive uptrend, which you can see, right? And what you notice is that it's kind of a little bit off the high under some momentum moving averages. So it's below key support right now, but I feel like if there's one quarter to maybe take a shot, it might be this one, just because the other couple times it had just been such an aggressive trend right at its high. Expectations were too high, and it just didn't really get rewarded. Now it's off the high. Expectations maybe a little bit lower. Maybe it could be a little bit more room for like a snapback move. Maybe back into like trend, back above trend support in like the teens area. Lockheed, so big aerospace defense name. 12 points is what they're looking for. It really been like just an unbelievable trending name. I mean, just off the December low. I mean, really just been fantastic. And it looks great. I mean, it has ticked lower the last couple days, but I mean, other than that, I mean, it looks great. The numbers have been great, and I feel like it's just been like a little bit lower volatility though. So when we're in these trends, I normally approach it by either waiting for a pullback or some sort of entrance after the implied volatility crush. So this one's just been in like a super aggressive uptrend. And last quarter wasn't like a too big of a mover, so that's probably how I would look at it again. So, wait out earnings, see if there's some sort of implied volatility crush or even some pullback, maybe take a shot on it because it seems like it wants to go higher, but I don't know if I'm really out the money on earnings. UPS, 575, about the price to move. I think this is going to be one of the more interesting ones next week. Had a really strong quarter in July, which you can see here. And it's hanging on to those gains, even though FedEx has absolutely fallen apart. So, the question to me is really, is UPS outperforming FedEx, and does it deserve to outperform it, or is there going to be a reversion back lower if UPS disappoints, right? Not to mention guidance going to include holiday quarter. So it just seems like it's one of those scenarios where UPS could have like a pretty volatile move. I mean, FedEx on one hand, holiday quarter coming up, gaps all over, big move last couple quarters. So it seems like there's a few things indicating a big move on UPS. UTX, 4.25 is what they're looking for. This one's still pending the Raytheon acquisition, so I'm not really sure what to expect this week. Chart, if you look at it from like a longer term perspective, it's kind of just bumping up into like this resistance range. So you can see that like it's not too far from like a really big level. And if it can get through like the low 140s with some volume, it could really be explosive. But it's just I just don't know if like the Raytheon deal is going to kind of keep a lid on it. I mean, maybe if anything, look at some like cheap upside, like bullish speculative position, just in case it does go, because you can see, I mean, that could be like a really nice pent up move if it does, but some question marks in that one. After the close Tuesday, Chipotle, the burrito, 57 points, so very expensive move from an option pricing perspective. Maybe not from like a percent move, but from like an option move, it seems expensive. It really hasn't had a huge move on its reports since February. That was the last time it had a really big outsized move. Options are expensive. Expectations are ridiculously high. The stock has been up a ton this year. It's right at its 52-week high, so it seems like it's just tough to see a ton of upside from here. I mean, it has been a great buy the dip candidate when it drops. So, I mean, that's probably how I would approach it, because I can't justify like taking a shot after like the move it's had, how expensive the options are, how high expectations are. iRobot. So 8.5 points is what's priced in. Absolutely smoked the last 2 quarters. So it's lost actually over 50% of its value the last couple quarters. Hasn't had a bounce since July's numbers. Hanging right at kind of key yearly support, which you can see here. Heavy short interest. So, it's had a couple big moves in a row, pricing in 8.5. So I feel like, it wouldn't be that unreasonable to say you could see like a 10-point move, but options at 8.5, maybe not leaving a whole lot of room. So I feel like I'd have to get the risk down a bit. So some sort of spreads, maybe even like flies. Just got to get that overall risk down, because options, I don't know if they leave a ton of room going both ways. Snap, 2 points was priced in this time. Had a really great year. Had a few nice quarters in a row, but it's starting to break the trend. Pretty significantly below some key levels now. This is going to be a big quarter, so if it's going to restore strength and restore the trend, I mean, they're really going to have to deliver. They have up until this point this year, so I mean, I guess you go with like recent history saying that bullish bias. The last few quarters have been pretty solid. So I mean, off the high, maybe you look at like a speculative bullish bet to see if it can snap back. See what I did there? Snap back and get back through like this moving average area. So back through like 16. I mean, right there, that'd be like a $2.5 move just if it gets back through the moving averages. Texas Instruments. So 575, 580 is what they're looking for. We caught a really nice move in July when it had like this huge pent up breakout. And when it broke 120, it popped to like 130, pulled back, and now it's just kind of hanging right at 130 again. So just like flagging underneath the 52-week high. Looks like it's set up for another move, but I don't know. I mean, expecting the same size of a move as July seems kind of tough. Especially because chip stocks have been a little bit tougher to get rewarded on this quarter too. So I feel like the only way I would maybe look at this is with some sort of like low debit, maybe like tighter spread, something like closer to the money. But even then, I mean, like semis seem like they've been mostly like sell the news. Like Taiwan Semi this week, ASML this week, both traded lower, even after like the numbers were decent. All right, Skechers, 4.5 points is what's priced in. This is Mr. Consistent. Good or bad, Skechers seems to always move 5 points. I mean, it's amazing how consistent it is. It really is. Problem is that it doesn't actually typically move much more than 5 points. It normally moves just about 5 points exactly. So options at 4.5, just about spot on. I feel like the only way to get an edge would probably be either to like skew a strangle to one side, right? So maybe like 2-to-1 risk to like the bull side or 2-to-1 risk to the bear side. But that's a little bit, it kind of like changes like the risk parameters of the trade. But I feel like that's really the only way to get an edge because it seems to move 5 points just over and over again. But options are priced in 4.5, so you'd have to get an edge somehow. All right, Boeing, 16 points. Those options are kind of fluid though because it's getting rocked today. Um, I really have no clue what to expect with Boeing. I really don't. I have no read on this stock. Last quarter, the guidance was like ugly, but nobody really seemed to care. It's been stuck in this monthly range. It was just right underneath the top of the range. Now it's back into the middle of the range. There's still a 737 max overhang. That's why it's getting hit on Friday. So like it. Like the stock doesn't make any sense to me. The way it moves doesn't make any sense to me. The pricing's not terrible, but I don't have like a feel for it. So personally, I'm leaving this thing alone. Cat, $6 is what's priced in. It's basically had ugly reports all year. I mean, all year the numbers have stunk, but it just doesn't stay down. Expectations are probably pretty low. So if they can beat, maybe you get a move up to like 140, but they're just so inconsistent, and like it just like the numbers just haven't been good. I mean, just straight up like missing and guiding lower. So, I mean, one like 6 points might leave some room on the option pricing. Just from like a strictly like point move perspective. So, I guess you could look at a volatility strategy. It's just I just feel like the after the last few quarters, like the bearish side just seems more interesting. Um, all right, Lilly, pharma name, 3.5 points is what's priced in here. It was one of the best pharma names for a stretch last year and earlier this year, but now it's really starting to lag, and it's in a pretty dangerous spot technically, because if they have weak results, you can see it's hanging right above support. If they have weak results, this thing could have a really significant breakdown. So, this is one to me where probably looking at like downside, some sort of downside bear strategy. I mean, you can just see like how clean of a support level this is, and it's leaning right above it after really starting to lag. So that's one of the more interesting, I feel like, bearish setups going in this week. Thermo Fisher. So may or may not be familiar with it. Big healthcare name. 16.5 points is what's priced in, but those are monthly options. This got rocked on QGen guidance a couple days ago. Well, I guess it's a week ago now. So you can see that this really really sharp drop. So that's like a peer in the diagnostic space, and it's going to come before Illumina, which is later in the week. So this one could be a little bit more volatile because I mean, like those are two of like the big names in that sector. So this could really set the tone. I wish there were weekly options. Unfortunately, there's not. So you got to pay for more time. But I do think that just based off how big of a move it had. I mean, it moved basically like 20 points just off a peer report. It's probably priced in 16.5 on its own report. So like that's definitely something to keep an eye on. I mean, it seems like it could be a pretty big move on that one. Granger, 20.5 points was priced in, had a huge pop on Fastenal's results, and it's right at the top of like yearly resistance, which you can see here. I don't know how much upside's left because expectations have definitely moved sharply higher with the stock. It seems like most of the risk is now to the downside, especially because last quarter Granger didn't really have a clean report, actually lowered guidance, so a little bit tougher of a setup, but I feel like most of the risk is now like more skewed to the downside on Granger. All right. After the close Wednesday, Invisalign. So 20.5 points is what's priced in. Just absolutely cratered last quarter after weak guidance. The bounce, I mean, it basically didn't bounce up until like the last 2 weeks, and then it's gone straight up. So I do like the idea of a bearish trade because last quarter was pretty bad, and it really only has had like a recent bounce. So I mean, it's kind of stalling out key areas. So I'm looking at some sort of bearish strategy targeting a move back down, maybe just to even where it was like a couple weeks ago. eBay, 210, 215 in that ballpark. I haven't really traded this recently, but I mean, kind of tight action underneath 40. So you can see 40 is kind of a bigger level the further back I go. Makes it slightly more interesting. Has had a couple decent quarters in a row, so maybe lean a little bit more bullish, but it hasn't really had a huge move in a while. So it's got some potential, but it's also maybe not going to be like a huge mover. So maybe something more speculative, maybe more low debit, just to see if maybe it can deliver. Maybe it gets up through like 40 into like maybe like the low 40s just to retest the high. Pricing in 215, I mean that'd be about like a 3 to 4 point move. Microsoft. All right, now we're getting into some tech reports. So 5.5 is what they're looking for in Microsoft. I mean, like this is like neck and neck with Apple for the biggest company. The problem with Microsoft is that everybody's expecting good numbers because they've been crushing it for the past 2 years, right? So stock, maybe not at its exact high, but it's very close to its 52-week high. Last quarter, they had good numbers, and it reversed to go red. So here, so last quarter, good numbers, opened up initially, but then reversed to go red. So as much as I really like the look of the setup, I mean, it just seems that like the option pricing is too high based on last quarter's move, some of the moves it's had recently. I mean, I feel like it probably wants to go higher eventually, but maybe like a calendar spread, selling like high near-term implied high near-term premium in favor of like a longer-term strategy, longer-term position, right? So something just to get implied volatility down because 5.5 seems kind of high for Microsoft, especially in this type of setup. PayPal, 5.25 is what they're looking for. Had a weaker print in July, and it's actually remained weak. So here, had a weaker print in July, broke down. Now it's underneath the 200-day, which is a pretty big like it's one of those things to take note of on a momentum tech stock is when it trades below the 200-day. So it's been under the 200-day, remained weak. Coming off a weaker quarter, so it does kind of seem susceptible to more downside, like Square, which is really starting to struggle again too. If it loses 100, maybe you're looking at like mid 90s. So 5.25, maybe you could have like a better move if it's like another weak print and it can like kind of like flush into like the mid to low 90s. Sarepta. So here's a bio. 7 points is what they're looking for, or about 7 points. Options are kind of thin. This one's really only interesting to me if there's some sort of FDA update. So they got a complete response in August, which is why it got hit so hard. And some people are thinking that they may be able to refile and get it approved. So any commentary on that in the press release is really going to move this a lot. So I mean that's really the only thing that makes it interesting because from like a numbers perspective, I'm not all that interested in it. NOW, 21 points, give or take, is what they're looking for. I mean, just a horrendous environment for software right now. I mean, team on Friday raised guidance and got hit. NOW is trading down. I mean, this was sold off after decent results in July. So it doesn't seem like it seems like no matter what these software stocks say, they just sell off. So, I don't really know how to approach it because like the numbers for the most part have been pretty good. The reactions have been bad. So it's kind of like mixed signals. And at some point, I feel like they're like these names are probably going to start getting rewarded for like good reports, especially if the market hangs around its high. Um, but 21 points priced in seems like a lot, especially with not a whole lot of conviction. So probably just going to leave it alone. Tesla. You don't hear me say this too often, but actually one of the more interesting setups. I don't trade Tesla very often, but they're looking for like 22 and a half this week. And why that's interesting is because it had a really sharp rally into July's results and then dropped almost 40. And it's bounced all the way back, closed the gap just this past week, still heavily shorted, and it's actually above the 200-day, which it hasn't been above that since like February. So, heavily shorted still, pricing in like just a little over, like a little over 22, but it moved almost 40 last quarter from almost the exact same position, right? So I feel like it's kind of set up well for a volatility strategy, like a strangle, right? Because it moved 40 last quarter. It typically moves. It's heavily shorted. It's one of those Momo names. So that definitely seems like the options are underpriced a bit on this one. Xilinx. So 7.5 points. It's the price to move on this. Semis and software, definitely two tough areas right now. So Xilinx has had back-to-back weaker quarters. So it got smashed in April, then followed it up in July with another weak guide. So it has lost just a ton of its momentum. It's below almost all of its moving averages, and as much as it looks bad, I just can't help can't shake the feeling that people actually want to be long this. It's one of those names where it feels like people are looking for a reason to be long. But it would have to be like a good quarter, and if it's a good quarter, then maybe it can kind of like start building and like sustain like a longer term rebound. So if I did anything with this, I might look at something like longer dated, like further out of the money, much longer dated, just to see if it can kind of like put together something good this quarter, and then maybe go on like kind of like an extended rebound, almost kind of similar to what it did in like May through July, right? Kind of like kind of start building. So maybe something further out of the money, like longer dated, like even like maybe like a couple months out. Whew. All right, so I haven't even gotten to Thursday yet. So Thursday before the open, 3M. 7 points is what they're looking for this quarter. Industrials really have been mostly by the bad news this quarter. For the most part, we'll see how this next week goes, but 3M has been one of the worst performers. The numbers have stunk. It was at a new 52-week low just last week, but it's bounced off of that. I'll say sentiment, one thing it has going for it is sentiment's pretty bad. And 7 points, really not too bad from an option pricing perspective. But it's really harder to gauge for me personally whether, it'll be good enough or bad enough to really get a big move because, like I said, industrials have been, a lot of mixed quarters, a lot of weaker guys, but they've been kind of bouncing or rallying. So it would probably have to be horrendous to really get hit pretty bad. Or it'd have to be probably pretty good to really rip, and the numbers really haven't been very good. So it's kind of like caught between a rock and a hard place. But I'll see how the week shakes out because a lot of time between now and next Thursday. Hershey's. So this isn't like a tech name, but it's like you're probably wondering why am I talking about this. 6.5 points is what's priced in, and the reason I'm talking about Hershey's is because of the year it's had. Look at this move. It's like they like cured cancer. It's up, just straight up, just riding like this trend. It's up, I think about 50% and change or somewhere in that ballpark. Performance just been nuts. But the valuation is just extremely stretched from like peers compared to peers. So it traded lower initially. So this was last quarter, this huge reversal bar. So traded lower after decent July results. So kind of curious to see if maybe they have mixed results or even like kind of like lackluster results if it gets hit harder because just a huge run, valuation stretch, traded lower even after decent results last quarter. So definitely more speculative, but after the run it's had, kind of tempting for like a bearish bet. Twitter. 375 is what's priced in on Twitter. Now, they put together back-to-back solid quarters and big jumps for the first time actually since the end of 2017, early 2018. So they had been kind of in like a period of like alternating gains and losses, or just kind of like back-to-back getting hit. But you can see the stock has been under pressure, just lost kind of like a key area today. Um, I'd say kind of like Snap, like the strength of the last two quarters makes me more bullish biased. But the upside could be more limited versus the previous two quarters because it doesn't have that momentum at the moment. I feel like the last two quarters it had some momentum, and now it's losing that momentum. So I again I'd probably go with like recent history, saying numbers. Maybe like numbers should be decent. But probably looking at some like lower some like spreads, like lower risk, or maybe even like calendars could be an interesting way to go about this too, because it seems like Twitter maybe gets like an initial quick pop and then kind of takes a little while to really build after that. So calendars, spreads could be an interesting way to go about it as well. After the close, Amazon 76 points, which is the biggest price to move of the week. So Amazon has definitely been struggling to join its big cap peers. So like Google, right near its 52-week high, Apple right at its 52-week high, Microsoft just off 52-week high. So really, really lagging substantially, and it really only just recently bounced. And as you can see, it hit the 200-day, failed the 200-day, and like I just said before about the 200-day, momentum stocks under the 200-day, you got to be careful. Kind of adding to that is that Amazon's closed red 3 out of its last 4 quarters, and it's actually traded red on the last 4 quarters. So one of those times it traded red, but it ended up finishing green. So it doesn't have a great history recently of getting rewarded. The stock doesn't look good technically, and it's been lagging pretty substantially. So to me, it seems like the bigger risk is to the downside, and it has actually had some like moves in like the 100-point range on the downside when it's missed. So this is either going to be an avoid, or if anything, I might look at some like cheap like speculative bearish trade on Amazon. eHealth. So these are monthly options, priced in about 12 points. Seems like the options could be underpriced on this one, and you may not be familiar with it. Kind of like a smaller market cap, very, very, very volatile name. But it had a huge move in July, about 27 points. It's dropped about 50% since then. Higher short interest has been kind of creeping up. So just like the idea of like a volatility strategy on this thing. Deckers. These are monthly options as well. 16.5 points is what they're pricing in. It's typically a volatile retailer. I mean, you can see it's had some big moves in the past. Right? So you can see it's had some big moves. Moved over 25 points last quarter, and it moved about 18 in February too. That's back here. So it's had some big moves this year. It's not my favorite name to trade. I haven't had a whole lot of success with it in the past, but probably worth a look if you have some experience with it. Because the option pricing really isn't too bad based off some of the moves it's had this year. Illumina, 18.5 points. This one really seems like a bearish setup to me. Absolutely hammered on guidance in July, and like I said, talking about Thermo Fisher earlier in the week, QGen had some kind of ugly guidance, and you'll see is that Illumina traded sharply lower that day also. So Thermo Fisher was rocked, and Illumina was also hit really hard that day as well. But Thermo Fisher, they could set the tone because they report first. So I'm really going to have to see how that goes before jumping in this. But I will say, if Illumina's numbers are bad again, 18.5 is probably going to be really light. That's how I look at it. Intel, 2.5 points. That's what they're pricing in this quarter on Intel. So it had a huge move in April, but then it really didn't do anything in July. So tough call this time around. Big move, no move, kind of like mixed, right? Right at the top of resistance here, so just underneath like that huge gap. So it's tempting, right? You got the really obvious gap there. But the problem is that semis just really haven't traded well this quarter. ASML got hit. Taiwan Semi got hit, even though both of those numbers were decent. So, I mean, it's going to be a really big report for the sector, but you know, it's not. I feel like Intel's not the easiest name to trade. Um, it is tempting because of that gap and some of the moves it's had, but I don't know if I have like a big edge. I'm on the fence. My opinion might change as the week goes on if I start to see some things act better. I have it on the radar. Not sure what I'm gonna do with it just yet. Visa, 5.25 is what's priced in. Another big report. I mean, this is a market cap wise huge financial. AXP was solid, but traded red on Friday. Financials had a nice week this past week. So Visa's at a pretty big area. I was talking about this along with Mastercard just in the video I did a couple days ago. Um, it's had a few good quarters in a row. Had some great action. Been in a nice yearly uptrend. So I feel like got to be bullish biased. I mean, it's like great uptrend, great numbers. Financials been acting great. It is later in the week too, so I'm gonna see where it looks. I'm gonna see where it is when earnings roll around and give it a look then. But I still like the idea of playing Mastercard as a sympathy trade because Mastercard doesn't report next week, and these two are like very, very, very closely correlated. All right, wrapping things up. Friday morning, Anheuser Busch, 385 is what's priced in. It moved over 7 in July, so here. And it moved over 4 in May. So options are definitely below average just based off those two moves. Decent technical setup, right? Kind of like a pennant forming, right? You can see just my crude drawings here, but like a decent technical setup. Options are priced below like the last 2 quarters average. So, seems like it's set up for a move either way. ITW. All right, 585. What's priced in? Industrials. They've just been getting a pass. So mixed quarters seems to be getting bought. There's going to be a bunch of big industrials before ITW reports Friday morning. So I'm going to see how those go first. But this has had some weak quarters recently, and if it does run into numbers, then I might take like a shot on the bearish side because they've the numbers haven't been great this year. Last couple quarters. So if it keeps running, take a shot probably on the bear side. And then last but not least, VF Corp. So apparel name, 475 is what's priced in, and this one could be set to join like the retail leadership because it's hanging great, even though like other apparel names like Ralph Lauren, Phillips Van Heusen have been smashed. And you can see that it's right under like a big area of resistance from like the 2-year chart. And it seems like if they can deliver and it can get up like maybe like a few more points, it could really break out. And we've seen some retailers just run and run and run, right? Like people just pile into like retail leadership, like Target, like Walmart, Dollar Tree, Costco, right? So, it's not that unusual. Home Depot, Lowe's, right? So we've seen plenty of instances where people seem to be kind of chasing some of these retail leaders. And this one seems like it's in a pretty good position to like join that leadership if they can deliver. So I'm thinking some sort of like bullish strategy on this. And that's it. Now I need to go take a break because I'm absolutely drained from one video here. So you can see just a ton of names, a ton of big names, a ton of expected major moves. So it's going to be a wild week. So rest up, relax, get a game plan in place because once we get into Tuesday, like it's going to be multiple names a night. So got to get that game plan in place. So you kind of already know what you want to be involved with. You're not scrambling the day of. All right. So questions or comments, reach out. I'd love to hear from you guys. If you like these videos, or if you like any of the videos that I do, or if you want more information about options to play, follow up with the link in the description of the video. We can set you up with somebody to give you more information on that. All right. So have a wonderful night. Have a wonderful weekend, and I'll talk to you on Monday.